In today's episode, we are talking Philip Morris versus Altria, two of the big tobacco giants in the industry. We're going to talk about a comparison between their business models. So they were originally one company. Why did they split? Their current versus their future growth opportunities and business models. Financials, we'll do a financial analysis, a value analysis, and then most importantly, we'll look at their dividends and their dividend growth history. So stay tuned for that in today's episode. And remember, if you want a channel that's going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is a place for you. So hit that subscribe button below. So for today's episode, I built a little comparison chart, and we're going to pick winners in each of the categories that we're going to look at. So first, we're going to look at their current business models, Philip Morris and Altria. So let's reveal what they currently do, how their businesses operate, and how they make their money. So Philip Morris and Altria used to be one company combined. And then Philip Morris was actually spun off due to concerns that stakeholders had. So they split into these kind of two operating companies. Philip Morris specializing in international tobacco and smokeless tobacco currently, and Altria focuses on U.S. tobacco, specifically the Marlboro brand, and then they have some wine brands as well, along with a few other smaller businesses. And so that's how they generate most of their revenue. So if we look at why Philip Morris and Altria broke up in the first place, it really had to do with pressure from U.S. stockholders and shareholders. They wanted higher dividends and more share buybacks, and they also wanted to spin off the international business. And so that was the way that the company broke up, where Altria would focus on the U.S. and Philip Morris would focus on the international brands. And essentially what occurred was higher dividends for Altria. The smoking lawsuits eventually stopped in the U.S. There hasn't been, these kind of huge blockbuster payments anymore, or at least in recent years. And Philip Morris went on to expand internationally. And so they kind of have evolved into slightly different business models, but they're both still the two biggest players in the tobacco industry. So if we look further down here, it talks about how Philip Morris has gotten into essentially smokeless tobacco. And also, heated tobacco. So rather than combustible products where you typically have a cigarette that you have to light on fire, there are these tobacco products that you can actually just heat, and it produces the nicotine vapor, essentially. And so that's what Philip Morris is focused on. Altria also went into e-cigarettes, obviously with the Juul acquisition, which turned out to be somewhat of a disaster because they essentially overpaid, and there's a lot of debt on the books for Juul. Juul was highly devalued, but they're also breaking into other markets, which we will talk about. So if we jump back to our spreadsheet, we can see that, again, Philip Morris is international tobacco and smokeless tobacco. Altria is U.S. tobacco and some wine. And if we look at the winner and why I picked the winner, it is Philip Morris. And this is mostly based off of revenue. So Philip Morris is generating higher revenue. It's slightly higher at around $29 billion for the 2019 year. And so I think Philip Morris has if you look at just their current business models, I think it is growing slightly because of how they've targeted their growth in certain regions and locales. But what we want to get into next is their growth areas. So let's reveal the growth areas for both of these companies. And if we look at this, as we started to talk about with Philip Morris, smokeless tobacco or heated tobacco really seems to be their focus, whereas Altria is looking at e-cigarettes and in particular marijuana growth, right? So as marijuana becomes legalized, Altria is well positioned and is a investor in a lot of cannabis companies and is well suited to kind of grow in the marijuana industry. So I think, both of these are interesting growth areas. I think the heated tobacco hasn't necessarily taken off in the U.S., but it is growing in other areas. So Philip Morris, when they look at if you look at their annual report, it kind of breaks up their revenues by region, but it also breaks it up by combustible versus non-combustible products. and they actually had over 5 billion in revenue from their non-combustible tobacco products, and so that's pretty significant portion of their business. Close to 20% of their revenue is generated from that. And so if that area keeps growing and gets popular and catches on, and they can bring the cost down of their devices and their production, it's definitely something to watch out for. Whereas Altria, I think, is really focused on e-cigarettes and marijuana, and I think that has more to do with regulation. And so let's see who I picked as the winner. I picked this as a tie. I think both are interesting areas. I give the slight edge to Altria because if for some reason in the U.S., let's say marijuana is completely legalized, which some people are saying that's the future, then I think Altria is very well positioned with its history to commercialize the industry and really be the leader and take a major share in that market share in that industry. So next we look at financials. And so let's reveal the financials for these companies. So for Philip Morris and Altria, I wasn't too impressed with the financials. And this is what actually, so I own a lot of shares in both of these companies, and their financials are actually the most concerning area for me. I think their current business models are fine. Their growth areas are fine. We'll get to the value and dividends piece in a few, but I think their financials are actually a little bit ugly. So let's jump over to another tab in the spreadsheet so we can look at their financials. All right, so if we look at just their financial metrics, you can see Philip Morris here and Altria on the second row. We're looking just at their financial metrics for now. We'll jump back to their dividends and value metrics in a second. If we look at the revenue, so revenue year over year, this is just kind of comparing this year versus last year. Altria is slightly up, right, 3%, and Philip Morris is slightly down. Anytime you see revenue going down, that's a concern, right? It could be a business problem, it could be a marketing problem, or I think in Philip Morris's case, right, it can be a industry problem. So tobacco, people know the dangers of smoking tobacco now, and so it's really hard to keep growing in an industry that is naturally contracting, right? So luckily they're diversifying and working on other revenue streams, but I think their primary revenue stream is regular cigarettes, and so you might see that in both of these cases that their revenue is not growing in a way that you would like to see. So you can see kind of in the 3-year and 5-year revenue categories, you're seeing the same thing. It's kind of just almost neutral, very slight growth in revenue in both the 3-year and 5-year term. For net income, same thing, right? Philip Morris, it has a slight edge here. This NM value means it's not really measurable. It's pretty insignificant. Free cash flow, they're kind of losing cash here over 3 years, or at least their growth of free cash flow. So not looking great for either company on those aspects. And then if we I always look at cash versus debt to see if they can kind of sustain themselves in a crisis, like kind of what we're having now with the COVID crisis. You can see these are in billions of dollars here. So this is 6.8 billion in revenue, or in cash, I should say, excuse me. And then 4.8 billion in cash for Altria for the year. And then if you look at their debt, it's around the same level. So 25 billion in debt and 24 billion in debt for Altria, giving them these ratios of around 27% cash to debt and 20% cash to debt for Altria. So I think none of this looks great. I'm not too impressed with any of this. So if we go back to our other tab and pick a winner, I mark this as a tie. Again, slight edge to Altria, just because I think their revenue growth is a little higher. I think it at least it is growing, and I think they're branching out into other growth areas has started to pay off a little bit. So if we look at value, let's reveal this metric. You can see what I looked at typically was PE ratio, so price to earnings, and then also price to cash. And let's actually jump back to the other spreadsheet, and I will show you the values that I looked at. All right, so if we look at PE ratio, right, so the sector PE is the same for both because they're both in the tobacco industry, consumable products industry, sits right around 20, right, a PE ratio, price to earnings ratio. If we look at their PE for the trailing 12 months, Philip Morris is at 15 and Altria is at 9. So if you're looking at value, right, and we're trying to pick things that we think are undervalued so that their growth is going up, right? And this is, again, a growth, if we're looking at a growth strategy type of investing. And so you guys can check out my previous video on the 3 types of investing strategies that I use. Primarily on this channel, I focus on dividends, but we can also talk about growth. So in this case, Altria is well below the sector PE, and Philip Morris is, also below. So neither one is in a bad situation as far as being undervalued. I think they're both potentially good buys if you believe in their business models and you understand that there's some inherent financial risk with both of these companies. So I think if we jump back to who is the winner here, it should be pretty obvious that Altria is the winner. They have a much lower PE ratio. I think they're very undervalued given how much revenue they generate. Again, their price to earnings compared to the rest of the sector. I think the sector has quite a bit of debt on its books to begin with, which is what I'm concerned with mostly in their financials. So compared to their peers, I think Altria is more undervalued, but Philip Morris is also undervalued. And last but not least, we're going to talk about dividends. So let's reveal the metrics that I am looking for in dividends. You guys can probably know what I'm already talking about if you watch some of my previous videos, but I tend to look at payout ratio, the yields at the time, and then their growth, their dividend growth over time. We're really focused on dividend growth strategies on this channel. So let's jump back to the spreadsheet and I can reveal what metrics I looked at for dividends. All right, so if we look at yield, we can see that Philip Morris is at around a 6% yield. Altria is hovering around an 8% yield. Compared to their 4-year averages, these are both above their 4-year averages, especially Altria, comparing 8% to around 5%. And then Philip Morris is slightly worse in 6% versus 5%. So when you see yields this high, you have to ask, are they sustainable at that amount? Maybe it's just a good time to buy, right? So like their price is fairly low compared to what they're paying out in their dividends. And so it might make sense to purchase those stocks at that time because their yield is high. So then what I typically will do, rather than just looking at yield, I also look at all these others and look at the payout ratio. So payout ratio for both of these companies is higher than I would like. However, in these tobacco companies, mostly what they're doing is paying their shareholders, right? So they aren't necessarily reinvesting a ton of their money into research. They pretty much have figured out their operations and they are just kind of cash cows, right? And they're printing money. And so what they do with that money is paying out investors. I do like Altria slightly better at 80% versus this 92%. But if you look, they're right around their 4-year average. That means they've been able to sustain these levels, these payout ratio levels for 4 years, but them just being this high in general. Again, if there's a crisis in the tobacco industry, anything that particularly affects either of these companies, they could be hurting. They could potentially cut their dividend because they're paying such high ratios. Then if we look at dividend growth, this metric is a little suspect here, 50 years versus 11 years of growth, because Philip Morris was spun off as a company, so they didn't have as long of a time to grow their dividend as Altria. But obviously, Altria has been growing their dividends for a very long period of time, is what you like to see. And then this is also a very important metric, right? So dividend growth over the past 5 years, you can see about a 10% rate of growth, which is great, versus a 3% rate of growth, which is okay, right? But that's what most dividend companies are doing for their growth rate year over year, whereas Altria has just been rapidly increasing their dividend over the past 5 years. So if we jump back to our spreadsheet, this can be shown here. Let's reveal. And again, the winner is Altria. So if we had to pick a winner overall, I would pick Altria. I think both of these, obviously I invest in both of these companies. I have holdings in both. They're two of my biggest holdings in my dividend passive income stream. And so I think you can't really go wrong with either. But if I needed to buy more of either company right now, I would pick Altria. I think mostly due to the value and the dividends. They're clear winners here. I think this is the option that you want to pick if you were going into it today and only had to choose one. I think Philip Morris's current business is actually a winner over Altria's, but I think in the future, and then also for its value and its dividends, Altria is the winner. So hopefully this information helped clear up what the differences are between Philip Morris and Altria for you. Leave a comment below if you agree or if you disagree, any metrics that I should have considered other than these areas here. And I will hopefully see you guys again next week. Don't forget to hit the like button, hit the subscribe. It really helps the channel and gets the message out there to others who haven't seen it yet.